So let's start. So the topic that we're going to cover today is support and resistance. This is a very basic topic that can help you in trading. You can set your supports and resistance and get to know that at which point a stock cannot go higher than this, or at which point a stock cannot go lower than this, right? So it helps in setting your stop loss and target levels. So first of all, let's discuss about what are the types of positions that people have when they enter a market. There are two types of positions. The first one is a long position, and the second one is a short position. Long position refers to when you buy first and sell later. Generally, people do that. In India, mostly people take long positions because in short positions it's not allowed on a longer durations. It's only allowed in intraday, right? Or you have to take derivative positions for that. If you know about derivative positions, just write yes, else I'll explain it later. If you don't know, just write no. No, okay, fine. So we'll discuss about derivatives later on, but let's just say that derivatives help in shorting stock or a few or a commodity or currency or any security. You can take short positions with the help of derivatives, because in India you cannot short on a particular stock for a longer duration. You can do that for an intraday position. Intraday means on the single day you buy and sell, or on a single day you sell first or buy later, but you cannot do that for a longer duration. So on the other hand, long position refers to when you're bullish. You remember we talked about this thing in the last lecture when I told you that bull is a person who believes that the market is going to go up, and a bear is a person who believes that the market is going to go down. So bulls generally buy first and sell later. They buy at a cheaper price and sell at a higher price. On the other hand, short position is a position in which you sell first at a higher price and then buy later at a lower price. So you can make profits both, in both the circumstances. So if you got this, just write yes in the chat box. If you want me to explain again, just write explain again. It was simple, right? Just a basic thing, right? Great. And yeah, I won't be giving this presentation, so I hope you all are making notes. If you want me to give you a minute to gather your pen and paper or a register, just do that. I'm giving you a minute. Take your pen and paper. You won't be getting this presentation. Okay. Yeah, start. So the next thing that we are going to talk about is your trading strategy. There are various trading strategies. Support and resistance can help you in one type of strategy when the market is not in a trend. It's not going upwards, it's not going downwards, it's moving sideways. So support and resistance can help you in those kind of stocks that are moving sideways. So there are various trading strategies, but every trading strategy involves three things. The first one is an entry rule. What is going to be an entry rule? For example, will you buy it when your price hits the support level, or there are various other indicators that we'll be talking about later on. For example, there's a particular candle shape at which you'll enter a trade, or if there's an RSI or MACD, there are various indicators. So you have to decide on your entry rule, that when are you going to enter a trade, right? And the next thing that you have to decide is your stop loss, that how much can you how much can you what can I say, that what's your risk control? How much can you lose, afford to lose? So that's a point at which you believe that if the price goes below this, I'm taking for a long person who's going who's buying first and selling later. So when a person buys first and sells later, so it's a possibility that the price might go down and you might start losing in the market. So how much can you afford to lose? And moreover, there's a point at which you feel like after this point the market will crash, the market will go down. So you have to, set a stop loss so that you do not, have unlimited losses. You do not keep on going losing your money. So you have to book your losses. For example, if your stop loss is set at 1,000 rupees, so you must book your losses at 1,000 so that the losses do not go beyond your risk control levels. So we have to set our entry rule at which we are going to enter the market, and next the stop loss at which we believe that this is our risk control levels and we cannot lose beyond this level. And the next one is your target level, at which we generally believe that our stock price after our analysis is going to be, and we'll exit after making a profit. So why do we set a target level is because suppose you're making a profit of 10,000. So there's an emotion, that's a human emotion of greed. We believe that if we made 10,000 on it, the stock price might go even higher. We might make 15,000, we might make 20,000. But generally, there's a level that we'll be discussing later on. That's the resistance level, beyond which it's very difficult for the price to go. So we set our target levels that we will book our profits and exit from the markets. So if these three conditions are clear, just write yes in the chat box. If you want me to explain again, just write no. And I hope you all are making notes. Right. So after you've decided your entry points, when are you going to enter the market, your entry rule, your stop loss levels, your target profits. So the next thing that we are going to discuss about is your time frame. When there are various types of traders. Some are scalpers. Scalpers refers to a person who generally enters and exits a position in a matter of few seconds or minutes. They would just, enter the market, make a few, bits of profit, like 500 or 1,000 rupees or something, and then just exit the positions. They generally, are very short-term traders. So these time frames that I've mentioned over here, 1 minute, 2 minute, 5 minutes, these are your candle sizes. You remember I told you about that time frame to mark for Nifty, right? It was a 1 day candle, right? So there are various time frames that you can use, and these have various significance. That when do you have to use a particular time frame? You do not just randomly set a time frame to 5 minutes and hope that you will buy a stock and sell it after a few months. So that is not a good strategy, because you're not using the right time frame for your right target. So when my target is intraday, when I'm buying and selling after a few minutes or a few hours, I'll generally use lesser time frames, right? So if my target is for, I'm setting a profit after, I believe that my profit target level will reach after half an hour. So I'll set my, time frames of 1 minute or 2 minutes or 5 minutes, right? If I believe that my stock price would reach my target levels in the same day, I'll use the time frames of 5 minutes, 15 minutes, 30 minutes, and 1 hour. So you must know these things. These are very basic things that you have to know. So we can, analyze later on that which time, because when we perform technical analysis, we must know that at which time frame are we performing this analysis. And the next thing, there are another types of traders that are in the market. They are positional traders. Positional trade refers to when you enter a position and you close your position after a few weeks or maybe a few months, right? So suppose you want to buy a stock today and you believe that your target price would reach after, say, a month or maybe 40 days or maybe 2 weeks, then you're a positional trader. So the time frames that a positional trader generally uses is 30 minutes to 1 day. That means a single candle, the length of a single candle is for 30 minutes to 1 day. Then if you are a long-term trader, for example, if you want to buy and sell on a long-term basis more than a year, and you want to use technical analysis for that, although generally people use fundamental analysis for long-term trades, but if you want to use technical analysis, you can do that as well. So if you want to use technical analysis for your long-term trades, you would be using a 1 day, 1 week, or 1 month candle to analyze your trends in the market. And the next thing that I mentioned over here is that generally generally it takes about 20 to 25 candles to reach your target levels. So you have to set your time frames accordingly. It may reach earlier than that. It may be, it's possible that your targets might be 14 candles, or it might take about 30 35 candles as well, but in general it takes about 20 to 25 candles. So if this thing about time frames works, because this is very important. Am I audible? Right. So then let's go on to the next topic. Support and resistance. This is a very important tool that you can use while entering and exiting the markets. And I'll be showing you a chart, proper chart after this later on. But let's just discuss what are supports and resistance levels. Support and resistance levels. So generally these words are used interchangeably because once a resistance level is broken, it becomes a support level. For example, I would say, just hold on. Suppose this is your support level. That means the stock price is not going below this level, right? So 60 is a support for suppose this stock, and we have observed that stock price is not going below this. Reaches this level, it goes up higher, and it again happened that it went to about this region and it went up higher again. So what we know is that this area is our support area, right? But when it went high, and this level is our resistance level, 100, right? So the price is not going below 60, and the price is not going above 100. So 60 is our support level, and 100 is our resistance level, right? If it's easy, just write yes and just write yes, right? So after this level was broken, right, we observed that this resistance level was broken. So support, you bought here and you sold here, you would just book your profits somewhere around here. And if you wanted to short your stock, or your whatever security that you've taken, if you wanted to take a sell position, if you wanted to sell first and buy later at this position, you can do that. But it's a possibility that that the price might go up higher. So it's a possibility that the price would have gone down. So we would have made profit on this. So we would have set a target level somewhere around here. But there's a possibility that the price might go higher. So we would set a stop loss somewhere around here, just above our resistance level, right? So we do this after we observe a complete candle that has been closed over here. So after a complete candle has been closed, we use this closing point as our stop loss. So we just book our losses and exit from this point, because we believe that the price might go higher and we might continue making losses. So if we do not want to continue making losses, we just book our small loss and exit from the market. And we will not enter a long trade because it's not a confirmation that it's going to go higher. But yeah, it's a confirmation that it's not going down anytime soon. So we just exit from this level. The next thing that happens is, in the market, suppose the price went higher and it went down again. So as I told you earlier, that our resistance level tends to become our next support. That's why this term support and resistance, these terms are used interchangeably. So this line, this point of 100 would become our next support. Earlier it was our resistance level, now it's a support level, right? So whenever it reaches this level, earlier we used to sell it, we used to book our profits. But now whenever it reaches this level, we are going to buy, because we believe that after a price has reached this level, it's going to go up higher. It's not going down again, right? And then we found our next resistance level beyond which the price is not able to go higher. This is our next resistance level, right? So, and another thing that happens is when the market goes down, you book profits just about your next recent support level that you created. So you will sell here and you'll book your profit somewhere around here. And if it breaches your previous support, there's a possibility that it might go lower than this again. And now this would become your resistance level again. So what we learned from this point, this diagram, is that your support and resistance, these terms can be used interchangeably. And once a resistance level is broken, it becomes your next support. Once a support level is broken, it becomes your next resistance level. If it's clear, just write yes in the chat box. Manish, are we talking about daily basis? Manish, it works on almost all the time frames. You can use this on a daily time frame, you can use it on an hourly time frame, you can use on a monthly time frame, so it works on all the time frames. Right. So now the next point that we are going to talk about is support and resistance zones. So generally, it's not a single price. It's not generally 100 that the price would go down from. It's not a single price level that you observe in the market. It's generally a range of prices. Sometimes it's 100, sometimes it's 98. So that's a range through which you create a zone, that when the price is in this zone, this is your support zone or resistance zone. Hold on. So this is your resistance zone. When the price is in this zone, I believe that it's going to go down anytime, right? So whenever we observe that a price is going towards its resistance zone, we book our profits. So as this was a support, so I bought here and I will sell just about it was going to enter its resistance zone or maybe even below that, because I want to be safe that it's a possibility that it might not go even higher. It might go down from here also. So I'll book my profits after it's 50 to 60% towards my target level, right? And a very small stop loss maybe of 5% and a profit of you can say 50% is there. So it's a very good strategy to work on. So the next thing that we got to know that is that it's not a single price level generally, it's a zone in which we work on. So I guess the diagram is self-explanatory again, but if it's okay, just write yes. If you want me to explain, just write explain again. Right. It's just that we were talking about support and resistance lines over there, and it's now support and resistance zones, right? So zones are generally better to work on because it gives you a range, and you know that the prices would be in whenever it's in that particular zone, you can exit your trade and not wait for a single price level. So that's a better thing to do again. So yeah. So how do you set your support and resistance zones? The thing is that suppose the price chart is something like this, right? So we will use the upper edge for setting our support and resistance zones. Right. So just hold on. So suppose the price went down from this to this and again this to this. So this would be our upper edge and this would be our lower edge. But suppose the price was somewhere around like this. So we would set our upper edge over here. So this would be our zone, this zone, right? And to set our lower edge, the same thing we do for a lower edge is that when the price is going up and down, so we set a lower edge on the basis of when the price went up and down for the lowest, the minimum point, right? So that would set a lower edge, and suppose the price was like going from somewhere like this, so we would set a upper edge over here and the lower edge over here, so that would create a next zone. If it's clear, just write yes in the chat box. Right. So how do we use this strategy? The first thing that, just hold on a second. Yeah. So how do we use the strategy? The first thing is that you identify, as per the recent history, the price has not been able to break your support or resistance. So you decide on your support or resistance levels, and suppose you've created your support and resistance levels, and now you have your support and resistance levels and zones created. Then you wait for your price to reach that area. You wait for the price to come in your support and resistance zone to enter a long or short position. When it's in your support zone, you enter a long position. When it's in your resistance zone, you enter for your short positions. Then enter when the price in that zone. The next thing is stop loss just above or below depending upon your trade. So if you are long, whenever I say long, just mean it means that I'm buying first and selling later. And whenever I'm saying short, it means that I'm selling first and buying later. So stop loss is just above my zone. Suppose this was my zone where I bought. Suppose the price went here, I bought here, and if it's going up, fine. If it goes down, so just below my support level, I'll book my losses whenever there's a finished complete candle. If there's a complete red candle over here and it's closing somewhere around here, I'll book my losses. And the same goes for my resistance zone. When the price is towards my resistance zone, I'll enter my short position. But what if it's not going in towards my profitable area, and if it goes higher, I'll book my profits after there's a complete candle over here. So that's my stop loss level, so that my losses do not keep on increasing. And the next thing is my target price. So my target price generally should be 50 to 60% of the reversal area. Reversal area means this price was going down and I bought it around here, and then this was a reversal, right? So we call a reversal towards the positive side as a rally, and a reversal towards downside as a pullback. So these are terms that are not written in the PPT, but yeah, you must know that whenever the price goes up, you call it a rally. Whenever the price goes down, you call it a pullback. So whenever it's 50 to 60% in that area, you book your profits. And it goes down again, you'll book your profits here, and you'll enter a fresh position over here. So when it comes down again, you'll book your profits around here and enter a fresh position again when the price is over here, right? So if it's clear, just write yes in the chat box. Great. Right. So just hold on. So till now, I'll just brief you up again. Till now, what we have discussed is what are long positions, what are short positions, right? The three things that you must do is before entering a trade is set an entry rule, set a stop loss level, set a target level. Next, what we decide is on our time frames. At which time frames are we going to work on? Suppose I'm going to enter a trade and I'm a positional trader and I want to enter a trade and sell after 20-25 days. I believe that my target would be reached in this time. So I would use an hourly time frame to a 1 day time frame. I will use these multiple time frames. And suppose if I'm an intraday trader, I'll use very short time frames from 1 minute to 1 hour at max. So if I'm a scalper, I would use very short time frame. If I'm an intraday normal trader, like I'll close some positions after 2 to 3 hours, 4 hours. I'll use generally 15 minutes to 1 hour. So, and if I'm a long-term trader, I'll use from 1 day to 1 month, right? So the next thing we talked about was support and resistance. So these are the levels at which the price goes in the opposite directions. So a very common scenario that you observe in the market. And the next thing is that the zones that we created, because generally we do not have a particular price after which a price rebounds. It's a zone through which it does, and then how to fit these zones, upper edge and lower edge, and how you can use this strategy. So I hope you've made your notes till now. If yes, then write yes in the chat box if you've made your notes, and then we'll move further. Right, great. So the next thing that we're going to talk about is support and resistance breach. So the support and resistance breach, as I told you earlier, will help us in setting our stop loss levels. So when there's a full candle outside your zone, right? So if it's a resistance zone and there's a complete green candle outside your zone, we'll say that our resistance has breached and we'll book our losses. And suppose there's a complete red candle just below your support zone, and we'll book our losses over there, and we'll say that our support level has breached. Then the price reverses from this point. So generally what happens is that not generally, okay, what happened, just hold on. Are you able to see my screen? No ना, मुझे भी नहीं दिख रही यार, क्या की होया? Right, is it visible now? Great. So yeah, so we were talking about this thing, that what happens, suppose, is that if the price reverses from this point, suppose you had your support levels over here and the price was going down, you entered a position over here, and then instead of going up, it went down. There was a complete candle, you booked your losses over here. But then suppose after a bit of going down, at from this level, it went up higher again. So what we got to know that this support zone has changed. So the new support zone that we'll create is using the next point that has been created. So we'll change the support zones, although we book the losses, but yeah, it's fine. It's a common practice. It happens. So we'll create a new support zone to the new price area that has created a new support zone for us. So let's clear this, right? Yes, in the chat box, right? Great. It was easy. So this is what I want you to do. Practice. I'll show you a real time screen before this. I mean after this, but just note it down that I want you to find support and resistance zones for at least 5 scripts. Scripts means anything. It can be a stock, it can be a commodity or a currency. So generally, you might not find that there's support and resistance levels, in your early time frame, in every possible chart
Hello.
Okay, am I audible this right? Yes. There was a Wi-Fi issue. Great. So we'll find a support and resistance zones for at least five scripts. That is your just for your practice. If you want to do that, you can do that. So it's up to you. And if you want me to check, I'll help you out with this too. So what's important is support. This support and resistance level must be verified for at least one reversal. One recent reversal to check for its accuracy and reliability. If there are more than one reversal, that's great. There are two, there are three, then that's great. And then take only recent reversal points for marking the zones, not a very old zone, because as I just mentioned that these zones keep on changing. So do not take very early points, very historical points for your marking your zones. So the next thing is that use candles closing points for marking. Suppose there is a candle, and then whenever you're marking zones, so suppose this was your candle and this was your wick over there. So we'll use this level to mark our zones, not the wick. Why? Because this price, is decided by, this was the price throughout the day, but this price is very important. The closing price for a green candle and for a red candle, for green candles over here and for red candles over downside. So the closing price is very important because generally the people, generally the traders who are more powerful, they decide the closing price, right? So the closing price is where you should mark your support and resistance zones. The next thing is, if you are unable to find a reliable support, then just skip. If you're unable to find a reliable resistance zone, then just skip. It's possible that the script might have just supports and might not have any resistance levels. In the recent points, it might have, obviously it might have something in the historical points, but recently it might not have a reliable support. It might not have a reliable resistance level. So if it's not there, you can just skip it and mark. If you find a support, you can mark that. If you find a resistance, you can mark that. If you find both, you can mark them, right? So if it's clear, just write yes, and then we are going to a live screen. Can you see this Euro USD chart? Yes, great. So as I just mentioned earlier, so suppose I'm using an hourly time frame to mark my support and resistance zones. So what I'll use is, I'll use a little less time frame for that to mark my accurate zones. So suppose what I'll use is, I'll use a 15 minutes time frame to mark my zones, and I'll mark that. Suppose this was the highest point for this price to go up, and this was the lowest point. I'll mark my zones over here. So these are just points. Not my zones have not been created yet. So these are just some points. So I observed again that this price went down till this point and then went higher again. And then I observed that this was another price in which we mark only significant zones, not every single point. Like I would mark this. So I would mark every single point on my chart. I would mark this because these are going in a trend. So these are not reliable. So I do not see a pullback or a significant rally from these points. So I'll mark only points from which I can observe a significant pullback or a significant rally, right? What happened now? Come on. Yeah. So now this was another point that I marked. that after this point it went down again, and at this point, after this reaching this point, it went up higher. And these are the various points after which it went higher again. Now this was a point after which it went down lower. So these are still not my support and resistance zones. These are just points that I'm marking to create my zones, right? So after this point it went higher again, after this point it went down lower again, and again I observed it over here, and again after this point. So and so on. So how much zones, how much such areas you have to mark? So I would say about 12 to 15 is what you need to do to get a reasonable accuracy for your support and resistance zone. So you must note it down that you must mark at least 12 to 15 zones for this. And after that, what I'll do is I'll go back to my hourly chart, and I'll observe that most of these zones that I marked were not significant enough. Although they were significant for 15 minutes time frame, but they're not significant for an hourly time frame. So I'll ignore these small zones. So right, so I'll ignore these ones, these middle ones, and I'll just mark zones at the top, right? So this is a significant point. I'll mark the highest point and then the lowest one over here. So this would create my zone. And again, to the downside, I would mark the low. Suppose I observed that this was a point, this could have created my zone, but this was the lowest one, and then again it went down lower to this. So this would create again a zone. So these two zones are, this is my resistance zone and this is my support zone. So the price, if it goes down to this point, I would buy with an expectation that it would go towards this area, somewhere around this. I would book my profits. And suppose if it goes down below this area, I would book my losses if it's under this area, right? If it's below my support zone, I'll book my losses. If it goes above, I'll book my profits. So this was the point when I would prefer to enter the market, when it was about to reach its support and resistance zone, right? So this is for an hourly time frame, and I've marked various support and resistance zones. So I'll show it to you like this. These were the most recent ones that I marked. And then what we observed was that the price even went high to this level, and historically it was also at this level as well, right? So I would create it as same technique. So this would be my bigger resistance zone, and this would be my lower resistance zone, steeper one, and this would be the area where the price is currently trading right now, right? So that's how you create a support and resistance zones, and that's one strategy that works in the market when the price is in consolidation phase, or when it's moving sideways. So as you can observe that it went up higher, but now it's moving sideways in its zone. So till it moves in the sideways direction, we can use the strategy. When it reaches this level, we might use a different strategy, but yeah, till it's in this area, we can use the strategy. So if this topics if this topic is clear, just write yes in the chat box, and we can end our class for today. If you have any doubt, you may ask a question straight away. Yes. Great. Right. So I hope you all made your notes, and you have to create, these support and resistance zones for any 5 scripts that you want to. You can use RA time frame for that. That's generally that would help you in performing trades, and use 15 minutes to mark your mini zones, and then an hourly time frame to check which of them are reliable and which of them are not, and then mark your zones accordingly, and then go back and check which were the stronger resistance and support level zones and mark them as well. So I hope that's it for today. So if you have any doubts, just you can ask your questions, else we can just wind up our class for today. If you have any doubts, you can will you provide? No, Tulika, I won't be providing you this PPT. As I mentioned earlier, that I won't be able to give you all the PPTs, so you had to make your notes for this one. right? So any other questions, or we are done for the day? Right. So that's it for today. I guess no one has any further doubts. Okay. See you again in the next session. No problem, Vaibhav. Problem at all.